All right, market's open. It's 9:32. I've marked my Asian session low. Let me mark my London session high. Let's just put this there. London session low, we're just gonna mark it like maybe, oh, we're gonna mark the London session somewhere. Sometimes I go down to the 5-minute. It is a Monday morning. All right, I'm gonna adjust some of these. NQ, ES. Cool. I like to just put this on 2 view where I can see everything sort of clearly. Turn off all these little indicators. Yeah. So on the 5-minute, this Asian session here, it's clear. Asian session did what it did. In the London session, price took out Asian low in both ES and NQ. However, in the NQ, I saw that price took out this previous day low, this black line. But in the ES, it did not take it out in the London. So then we get into the pre-market, which is this little gap here. Yeah, in this gap here, ES takes out that previous day low and then London low and makes a new low down here. Let's just put that low as black, which is cool. This is liquidity. If it takes this out and starts reversing back up, which it looks like it's trying to do, then we focus on going up, which makes sense because I don't care about SoFi, which makes sense because on the larger scale, when I look at the 4-hour, the weekly, and the daily, I see that price looks bullish. So we see price going up here in NQ. It had previously taken out previous day low, and now it's reversing up. So my indication, like, I don't use SMT divergence consistently, but when I see that price took out something on one instrument but didn't take it out in the other, I can presume that the instrument that did not take out that level where the previous one did is going to indicate the true direction, which is what's happening right now. So ES did not take out this level at the same time that NQ took it out, which suggested to me that ES was going to be likely my leading, and ES is hinting that we're going to be in a bullish trend. So if we're in a bullish trend, which is what it's looking like right now on the 5-minute, all we're waiting for is a fair value gap. And I see a fair value gap right here. It's not been touched into. I see a fair value gap right here, which is cool. All these fair value gaps are neat, but you want to see a fair value gap that gets tapped back into, and you want to enter into a trade that is in your time zone. So not time zone, in the right macros period. Like right now, price is still regulating. I looked at Forex Factory yesterday night and I didn't see any news, so we still don't have nothing going on. I would likely trade on, what is this, ES, so I would just prepare my whatever. I think I can trade 3 contracts on these. I never recall. I usually only do 2 contracts, but yeah. And I stick to the 5-minute. I'm not with going down into I want to see the fair value gap be tapped into on the 5-minute. That's what makes it more interesting, and it makes it more secure. Like, okay, 5 minute is pretty good. Hold on. Nope. Even if it was here. Nope. This one, doing the 3. And I just don't trade. I try not to trade before 950, because sometimes market will just completely reverse and trip you out. If you feel like, sometimes I feel like I'm gonna miss it, but it's not a big deal. Price will always retrace back, and then ultimately the target would be up here. Target would be previous day high. But we give price time to adjust, settle, figure out itself, sort itself out, so to speak, before making a decision. So that's why I don't trade before 950. Let's see. Could potentially draw an equilibrium here on ES once this candle is formed to see if it'll do. Well, we can do it. Maybe we can do it now. Let's see if it touches down into this space, which is like another way of looking at fair value gap. Then it's a good sign to consider going bullish on this trade and taking the trade. So first we have liquidity, where price has taken out previous day. Sorry, I'm multitasking and watching a movie. There you go. Okay, we've seen price take out previous day low. It's taken out Asian. It's dropped significantly. It showed us this liquidity, and now it's giving this reversal. We've seen the break of structure here. Actually, here technically, we've closed above this last low. Break of structure to the upside. We have great momentum. This is a nice big candle. That's always nice to see if it's going in the direction that we want. I see a fair value gap formed here, but no touching in the 5 minutes. I see the fair value gap here. This candle's going to close in 7 seconds. It's not going to touch down. I see this fair value gap formed here. I don't see any touchdown into this space. I see another candle. That's nice. Let me do a equilibrium here, up here. Let's see. Because these two sort of, not 100%, but they kind of mirror each other to some point, I use them as reference for each other. So I see that this candle here, this instrument, is trying to get into this gap, and it looks like it gets in there a little bit. It also looks like it has touched just a little bit into my equilibrium here, right? If I still wanted to enter into NQ, I could, using this confirmation, like if I was going to go bullish, but obviously we'd wait for this candle to finish forming, and we'd want a candle to form going back outward to give us that signal that we're going bullish. That's the whole goal. So let's give it some time. This is just a 4-minute candle. Let's see what happens. It may end up completely saying no. And also, if we note here, price has gone up again and taken out this Asia low, London high, and made. So these key levels are important to pay attention to. I like the idea of a price staying above a key level and me taking that trade up to the next key level. When you're in this space here, you don't know what price wants to do because this is such a strong magnet. Sometimes price will just hover here, which is frustrating to see. But it's because it's a key level, so it makes complete sense. In the same regard, this candle here is an indecisive candle. So because we have this big green candle, then we have this, we can also see that this next candle would be bearish because of this shape. I don't know if they even call this like an evening star or whatever, but when I see like a big green candle, a skinny, indecisive candle, I know that the opposite color of this candle is going to be pretty strong or boldish, at least going over here. It's going to show me some bearish candle. It may not continue all the way down, just depends on what price wants to do, but at least I know this is going to be a bearish candle compared to the 2 candles prior. So we gotta wait for the candle to close. We still have 2 minutes and 40 seconds left, so we'll just see what the candle does, what price wants to do. So maybe my fair value gap might not be honored on the ES, but the candle has not finished forming, so I'm just gonna wait, watch, and see. Also, I see this fair value gap here, but it got invalidated when this candle closed beneath it, so I take that out. I see the fair value gap here somewhere. Hold on, did I draw that right? Oh, yeah. So a fair value gap there that might be honored on the NQ. Let's see. You want to see like most of your confluences honored in order for you to feel confident. So breaker structure happened on both. Great. Fair value gap created. Great. But here, this fair value gap was invalidated, so that throws me off, and I focus on here. Fair value gap created, and so far it's being honored, but we gotta wait another minute 45 to first see if we're going to continue to honor it. And let's see. But I've also put all these other fair value gaps here because it can not honor one but honor the others, and that still would be considered valid. But then I use my equilibrium as well. I don't do order blocks anymore because it's kind of confusing. I don't really use Fibonacci. I don't use breaker blocks. Um, I think I focus more on price action, market structure, and use that as an overall guidance. And then I use confluences to give me confirmation to feel comfortable getting in and out of a trade. And I feel like that's simple because the price doesn't always move in the direction that you want, regardless of um, all the steps and all the confluences. But if you can see the overall picture of the market and what direction it wants to go in, and if you can see things in the movement of price that support that same direction, then you that's all you need. Enter into the trade. You can lose, you can win, but you have a reason. You always have to have a why, and once you have a why, you go in. You're good. So I see that this These two fair value gaps are being honored. This fair value gap is being honored so far, but we're not done with the candle. It's almost finished. Oh Lord. I want to see the candle close out of this, like go in this direction. I want to see the candle here close out in this direction. So price closed beneath the equilibrium and still honor the fair value gap. So the equilibrium is not proving to be a true confluence, because equilibrium works when the price dips past this 50% line, but it's not supposed to close underneath it. So on both sets it has closed underneath it, so I'm not super confident with the fair value gap. Now I'm just leaving it there for whatever reason, because now I'm not using the equilibrium as a confluence. I'm strictly using breaker structure and fair value gap. We also have to look at the sizes of the candles. We have these two large candles here. Again, these two mirror each other. What you may see on one, you may not see on this yet, but it will reflect on the next one. So what I'm seeing on here is this large candle where there's obviously this indecisive candle. Then you have this large dark candle, large dark candle. Then when you go to the next candle here, the 950 candle on the 5-minute time frame, big candle here, but small. So again, ES is the one that did not take out this lower previous day low, which to me was the initial indication that we were going to be bullish. And now I'm seeing smaller candles right now in this fair value gap where I've not yet seen smaller candles, which to me, in my mind, I start thinking, does ES want to tell us that it's going to be bullish? Because if the bearish candles are getting smaller, then it might end up reversing into bullish direction, and that will give us the confidence to get into the trade and you know, um, aim for the take profit to be up here. NQ would be ideal. I never know how to draw the points here. Just use a measuring tape. This is it. 11 bars, 105 points there versus here. Okay. Let's see. Oh Lord. The goal is to stay up until 11 and then go to bed. Where is the? Oh yeah, here it is. I've been looking for this. Oh, 5-minute. Okay, we're about to hit. Okay, now it's 10 a.m. We're still getting candles going in, which is not bad. Sometimes the longer it takes for price to again could give you a bigger confluence going. Could be the biggest confluence actually that you would need going back up. But we'll just watch it. See the candles trying to go up on NQ. You can trade on Top Step. I mean, you can use their candles. I mean, I like this Project X platform. Easy to look at. This fair value gap was invalidated when it closed beneath, so we can remove it. This fair value gap also was invalidated. Am I right? New update. Yeah, this fair value gap got invalidated, right? Yeah, because it closed beneath it. So if I drop down to the 1 minute here. Okay. Yeah, this equilibrium was not honored. Which is cool. This desperately wants to get desperately wants to get into this gap. Desperately wants to get into this initial gap that was made like right in the pre-market. Mm-mm-mm-mm. I think I printed something where it has like, I gotta find it. Like cheat. Should we? Yep. I have this red folder cheat sheet that I made. What is the red folder news one? I guess I need to make an orange folder and a yellow folder. This is a red folder one. I don't have a yellow folder. My phone. trying. Oh Lord. Oh Lord. I'm glad I didn't take anything in this area. Imagine like taking this, entering into a trade for bullish here. You would have been in a 5, 10, 15, 20 minute drawdown. Even if this price ends up turning up bullish, which is what we're expecting, the fact that you would be in this half an hour drawdown is like the most the mental games that you would go through in your brain would be so annoying. This is why I look at candle patterns. I don't look at all of them. I only focus on like two. And I look at other things like, why is this not moving? Like these are equal lows. So I can see price wanting to come down here. I can see price wanting to come down. And no, these are not equal lows. They're relatively, but not crazy. But looking at patterns of candles is what kind of helps you stay away or avoid certain things. Patience is such a big deal when I'm trading. I have to be patient, and it's like such a fight because naturally I'm not patient in a lot of other areas. Like when it comes to work, I need results super fast. When I'm looking at lab results for patients, if I'm even when I was a nurse and I'm getting patients out of bed, you're like, come on, get out of bed. I got like five other patients. In a way, like you're just not patient because you're looking at your time. You're looking. You have 12 hours. You've got so much to do in those 12 hours. You want to finish all your documentation, see your patients, do whatever you need to do. Because you don't want to be there past your shift. So naturally, I feel like many of us, especially in the healthcare space, we don't have time to be patient because our jobs don't allow us to be patient because it's all about taking care of these patients who need results quickly. So everything that you do has to be done quickly, on time or early. And trading is like you have to literally wait, which is so counter to like how we've been trained in the healthcare space. You literally have to wait, and the waiting sucks, but it pays out in the end. Either you end up not losing any money, you end up losing a little bit, or you end up making great. So it pays, it really does. It's better to not trade at all on some days like where you're not confident or comfortable than for you to have traded, put yourself into a trade and like go through the emotions of why did I do that? I wish I could take it back. Oh my god, I lost so much. Let me go back in and at least reduce how much I lost so it's not as big, and it doesn't work that way. You don't if you plan to trade that way, you will always lose. You'll plan to fail every time. It's better to be patient. So you take your time. That's why I say I don't enter into a trade until after 9:50. That gives me time to look at the market. Like really take my time to look at it. Um, Especially when I finish the 12-hour shift at night, like if I really focus on trading at 8:30, it's not going to work, right? Cuz by the time I get home or get back to the hotel, take a shower, eat breakfast, change, all those kind of things, like I don't make that 8:30 mark. So then I remind myself, well, you're not getting into a trade until, 8:50 Central Time. Anyways, so take your time. It's all about being patient. Patience is such a big deal. It's such a big deal. So just being patient. And the window to trade really is between that 9:50 Eastern to 10:30. So ideally, if you don't see a trade within that period, it's ideal not to just do anything. Don't get into a trade. Don't bother doing anything. Um, it's better to just be patient, watch if something presents itself. If it doesn't present itself, then cool. Go to bed, look for another day. It's worth it. I swear it's so much worth it. It's worth it. Like if there are 5 trading days in a week and you only enter into one trade or two trades that week because they show your A plus setup, your benefits outweigh the other 3 days that you would have entered into a trade and lost and gone through the whole mentation of like, why did I get in? I shouldn't have gotten in. What did I miss? What did I do? I need to change my strategy. Maybe I put in this and this. It's worth it to look at the chart Monday, Tuesday, Wednesday, Thursday, Friday, but only trade 2 of those days and be profitable. Then to enter into a trade every single one of those days and be profitable too, lose all three, and you end up being in the red or negative, because you lost more than you made. It's not worth it. It's just not. So the idea is like, what if we're reversing, right? What if we're actually making a bearish confluence here? What if we've taken out this key level and now we're going down? Well, then I would look for confluences going down in that direction, and I would look for, you know, um, change of direction, pretty much, and because now we've had this key level swept, I would look for change of direction, which technically hasn't happened yet. I would look for fair value gap to be created. Like here's a fair value gap, but it's not been tapped into. So here there are no fair value gaps made yet. Nope. There might be one being made down here. There's one here trying to be made. But this is also another key level, so you've got to pay attention to the fact that if price decides to go down here, it might either take it out, tap it, and start reversing back up. And then again, we start all over. We look for fair value gap. We look for it to be tapped into. We look for um, equilibrium, all the things. I like ES because I feel like it's honoring a little bit better than NQ is. At least now it is. Um, Here it took out Asia high, London high. Now it's coming down. I suspect that if it's a true bullish, I suspect it won't surpass this new low. It'll reverse back. Yeah, because if we're doing SMT, which again SMT is not really my thing, but like it's not my thing as much because I can never remember. It kind of makes me a little anxious. But yeah, this made a lower low. This made a mild lower low. Is that right? Yeah, yeah. So lower low. Here, this one is kind of mild, which shows that we're gonna reverse. If price, if this price were to come and take this whole line out, then this would be invalidated and we wouldn't use this SMT. So right now, as of 10:15, candle is going up. We have this almost indecisive like doji candle here. I'm expecting bullish response. I'm also looking to see if some fair value gaps are going to be, let's see if this one is going to be invalidated. Painted a different color. Let's see if it gets invalidated. I can enter into a trade if it's invalidated. Let's see how this candle closes. If it closes bullish, we might take it. SMT divergence on the 5 minutes being honored so far. And here it kind of honored this London low by not taking it out. So let's see how this candle closes. And then we might be able to take bullish up. Just got awfully close to this London low here. That's crazy. Let's see. Honestly, this fair value gap has been honored, right? Compared to this fair value gap made here was closed here, started below it, almost just honored. And here it has been honored. So we're gonna enter on ES. As long as it closes above this gap, we can enter in on ES. So ES, let's see, let us.
Order filled.
Okay, well, let us do the 3. I do my stop loss down here. I draw a stop loss to be somewhere down here. I make it a different color, embolden it, and then put an alarm. I'm not good at drawing this stuff here. I'm going to put this here. As an alarm. Actually, let me put that here. So this is 6943, 694. 3. Okay. Let's see what happens.
Congratulations on taking the first step to register for the AI Income Workshop, but do not close this page yet because your registration is not quite yet complete. I'm sure you can tell from the name that this is not a regular event. This is an actual workshop. That means for each live session, I'm going to send you workbooks with fill-in-the-blank questions for you to execute on what you have learned. In fact, there's one resource you can download right away. It's what I call the 2026 Plan of Attack. This is actually something I personally go through every single year to set the action plan and achieve the goals that I have for that year. And in 2026, it wouldn't be any different. You can go over this resource right now to lay the groundwork and be ready to crush once we start the workshop. The thing is, you can only access the 2026 Plan of Attack and all the other workbooks by joining the workshop's private WhatsApp group. That is where I'm going to send you the download links as well as the links for the live sessions. So make sure to continue this registration flow until the end and join the WhatsApp group. It is only once you are inside the WhatsApp group that your registration will be complete. And right here below this video, I've left a quick survey for you to fill out, so that way I know exactly what stage you're at right now. And this way I can really tailor the content of each live session based on your specific needs. It's a really quick survey and it won't take more than 2 minutes to complete. Now, final thing, after submitting the survey form, you're gonna have the option to get the VIP experience as well as a crazy tool that I wired.
Jumped into the 1 minute. I always forget to do that. Let me see what this thing. It'd be nice to get out of a trade at like 10:30 exactly. But since we kind of entered into the trade a little bit later, sort of hard to just get out. But looking at the candles, looking at this reversal here, it's not exactly exciting to look at. Because ideally, let's see. I'm gonna sell
Order
to
filled.
here. The reason why I get out is because I already see this candle reversing now on the 1 minute. it kind of hit, yeah, it hit this key level. Now it's reversing back out. So let's see. I might close my position.
Order filled.
And just watch. If my candle if a candle goes above this and closes above this line, then I can take a trade to this next key level, which would be the most ideal kind of trade. I forgot that I try to drop down to the 1 minute after a fair value gap has been respected. Drop down to the 1 minute. Let's see. And then take those trades. So technically this was like a 1, 2, I don't know. Let me go back to the 5 minute. This was a 1, 2, so 10, 15 minute, almost 15 minute. Really a 13-minute trade or a 12-minute trade. This was. But if you drop down to the 1 minute, just seeing these candles hit this sort of almost equal highs here lets me know the price wants to start reversing. But it was gracious enough to hit this key blue level, right, which is the London low. It was gracious enough to hit that, and now it's kind of giving you this little bit. Now this could just be a retracement, which is fine, a drawdown in a little bit before it goes back up. But in my mind, because I'm going on the 1 minute and because this is a key level, I'm cautious. Now if I entered on this trade, I would have continued. It wouldn't have mattered to me what the price was, how much of the drawdown was, because this fair value gap has been this fair value gap has been inverse in the direction that I was already expecting, and there's enough gap here between this fair value gap and my key level. But with the ES, this key level is so close, I was more cautious. Let's see. Yeah, my risk to reward was 1.86, so 1 to 1.86. So my next target would be if I had price close above this key level up here, then and it showed me fair value gap and all those things again, then I would be comfortable to take this to the next price target. So I'm going to delete that. So the 5 minute gives you the bigger time frame on what's going on, obviously. But the 1 minute is where you kind of trace your earnings versus your losses, your profit, what have you. That gives you more of a precise entry and a precise exit versus the 5 minute. But of course, you can trade on the 5 minute. People trade on the 5 minute, 3 minute, 30 minute, 1 hour. Just depends. For me, it's really supposed to be the 1 minute. Sometimes I stick to the 5 minute because the 1 minute sometimes can just be kind of annoying. To see the candle move in 60-second movements. I mean, if you go on the time frame here, you can literally pick to see the candle move in seconds. Like, why would I want to do that? Some people trade like that. Personally, it's not a thing for me. It would not be a thing for me. So I'm looking to see if there are any. So I know that I'm actually going to shift this fair value gap to support this right here. Yep, there's this fair value gap. This is on the 5 minute. Let me look on the 1 minute to see if it was honored. Looks like twice it was. If price closes above this candle and stays closed above it, people will say if the candle goes above this level, touches down, like respects it, and then goes up, then go for this price. But what I'm going to do is just go in.
Order filled.
And I'm going to put my stop loss beneath my last fair value gap, which was right here. I'm not a fan of these long positions. This candle closed above this blue line, so I'm cool to take it. I'm putting this beneath this swing low here, drawing this up here. These lines are so close together, I might as well get that. That's a 1.36. This is a swing. This is a swing low. What level is this? 6652. 66. 6652. This is on the 1 minute. Let's see. And this is a 1 minute fair value gap. See this line here. I'm gonna put it right here. Let's see. I can't see. Let's give it time. This is an important key level, so seeing price close above it here and above it here. And to see with the NQ, price is still moving upward. It's likely going to hit this key level. Might retrace back down, but then still keep going up. Because here, price is closed above these key levels. So here, likely, NQ will likely close, but it might take a while. It might dilly-dally here before it actually goes up. So it's just a matter of watching it. Well, this candle here. This is a very, oh my god, indecisive candle. If I've seen, like, there is absolutely no body whatsoever on this candle. That's crazy. There is no body on this candle. Am I seeing that right? That is insane. I don't think I've seen a candle like that in a while. There is nobody here. Am I tripping? No, I guess there is like this line. Oh my god, that's kind of insane. That's kind of insane. Lord, another one, huh? 6 seconds left. Let's see. Do I wanna... Yeah, look at that. Yikes. That's insane. Not seen that in a minute. That's like a perfect indecisiveness here. And that sucks. Let's see. Because it depends if we're still... Obviously, this fair value gap has been invalidated. And that's on the 1 minute that I created it. So the 5 minutes always going to have a heavier... this is a 5 minute fair value gap. Still sort of honoring. Let me go back out to the 5 minute. Let me see what I'm seeing. Yeah, 5 minute gap. Let's see. I mean, realistically, on the 5 minute, I don't want my price to go beneath this line here. This is insane. Part of me is like, should I just get out? Take my small losses? Or do we just wait for price to do what it needs to do? This is on the 1 minute, right? So you're trying to catch profits up here, which, who knows? Now we're out of trading window period, so let's just see where this candle closes and see where the next candle closes. Let's see. I should have just taken my profits and left. See, this is the high. This hasn't even taken out the high again like ES has, which is interesting. If it goes below this swing low and closes, then I'll get out. Although my fair value gap is still down here, but sometimes being in a drawdown for that long is not great, especially since we're kind of out of our trading window. Oh, okay, 5-minute candle.
Order filled.
Yep. So we're negative 654 because we hit our stop loss. Though our fair value gap is still here. Alrighty. Let me remove this. I still think price will go up here at some point. If it closes above here again, I'll still take it up because I do believe that price still wants to go up. It's given that indication a couple times, and on the bigger time frames, it wants to be up. But for now, we can just say we've lost 654 times 6, and yeah. Would I do anything different? Nope. Price action today was not great. I'm so glad I got in though. Because it gave all the signals, it had the volume, momentum, things like that. But looking at it now, because our time frame is within this window, let me draw it. Time frame is within these two windows, so really not much to give us on the 5-minute. But it's all good. I'm so glad we traded, got out. Risk-wise, 654 for each account is honestly not bad. I try not to go above 1500 if I can. Oh, look at it. What? It's really going beyond the fair value gap here and this fair value gap there. That's crazy. Price will always do what it needs to do. You just want to be in control of what you put in, so that you don't over risk. But yep, let's see what